Hello. We have a bunch of new people watching the stream this morning, so we're going to talk a little bit about some ground rules and explanations of what this is to make sure that every viewer gets the most out of this and understands what we're doing here. So, I guess first and foremost, anything we share here is just sharing stocks that we're trading. We are not financial advisor. Nothing that you see here is a recommendation to buy or sell a security. Now that we've gotten that out of the way, obviously, we're going to talk about what we're doing here. So if you are someone that is watching the stream because you follow us on social media and you like what we're doing, but you have never traded stocks before, this stream is probably not going to be beneficial for you. This stream is meant for people that know how to trade and that want to see what the morning gappers are that we're interested in, what price levels we're interested in opening a position at, and the strategies that we have for the day. You wouldn't be able to understand any of it if you've never traded before. So if this is you, go down in the description of this video. We have a free masterclass that can help you learn the basics of trading and more importantly help you understand whether trading is for you. And if you do want to trade, then you can grab our course, learn how to trade, and then with the course you get 6 months access to our trading room where we trade live every day, and you can continue learning, and also you'll have time to practice with fake money, because the statistics are if you spend 6 months practicing with fake money, you're a lot less likely to be one of the 9 out of 10 traders that fail because they jump in too quickly without knowing what they're doing, and with real money. Okay, so now that we covered all of that, for anyone that's going to sign off to go study, good luck. Can't wait to have you back to watch this stream once you're ready. Now, for all my students that are staying because they know how to trade and they've been trading with us, or they haven't been trading with us, they've been trading alone and they need help finding stocks to trade and recognizing setups, welcome. We do this stream every morning where we go over our pre-market gappers. This is a custom scanner that looks for stocks that fit the criteria that we've personally put together and improved over the years of trading to help us find stocks with the highest potential to explode, double, triple during the day. When something insane like that happens, it's always one of the stocks on our scanner. Does it happen every day? No, you're not going to have a stock that doubles every day, but every day you're going to have an opportunity to trade ranges. And this is what we're doing here every morning. We're finding the ranges. We're finding support and resistance levels. And all trading is, if you're a long bias trader, is buying on support and selling on resistance. That's what it is. And there's opportunities like that all day, every day. And in the morning is how we identify these levels. We do all the work before the market opens, so that when the market opens, we can instantly execute trades. We have a few good videos, a few good trade reviews that show exactly how we execute these trades. Be sure to watch them if you need help executing trades fast, if you need help understanding how to use Think or Swim to help your trading, etc. Okay, so the first one up is ZIVO. We actually traded this one last week as well. It had a piece of news that was dropped. I don't see that there's new news that was dropped, last night or this morning to cause this move. So it could potentially just be a short squeeze, from people that have opened short positions after the original spike. After this one, they could potentially be, getting squeezed out here on break above 450. Yeah, so it seems like break above 450 started this massive squeeze. So it's already in squeeze mode. No new piece of news, but the news that was dropped was soon enough, so we're safe in that regard. And then also it's NASDAQ, not NYSE, so they're less likely to halt it, request for more info if it's moving without news. again, the news was fairly recent, and this is an obvious squeeze, so it's fine. So we have this level, right, that caused the squeeze. So that's a key level. We're very far from it, so it might not be a level that will even be in play today, but we'll pay attention to it. If it drops to that level, that's a buy level for us to, the next level of resistance. But right now where it's at, we were actually taking trades this morning in the pre-market session. We did take this VWAP bounce trade. So it's, that when we get up in the morning and chart it, if there is enough volume and there's no spread, we see there's no spread here, we definitely do take pre-market trades as well. And that's really helpful also for our students that either live in places that have a big time difference and the pre-market session actually works better for them, or students that live in the US in the Eastern time zone and have to go to work when the market opens. This gives them opportunities. There's plenty of opportunities in the pre-market session as well. So these are the levels that we're watching. Again, if the stock opens at 717, well, that's also sort of starting to form a level, because there's a rejection here, and then there's a rejection here, so we can chart that too. I try and avoid to have too many lines, because then it just becomes a mush, and try and just keep the most obvious ones. So yes, I'll actually remove that one. To get the most obvious ones, you just use the lines that touch the most number of candles. So this one's touching these three, so I don't have to get another one here. It's fine. This one here is actually from another day, so we can remove it for now. I can leave this one here too, the high of day. Now here again, I have a mush of too many. But even though it's reacting to both, so we just have to leave it because they're important. Okay, so let's say it opens somewhere here. It says 660, which is no man's land. So then what we're looking for is either a drop to this level and a bounce. We don't just buy on the way down, because we don't try and catch a falling knife, because it could drop here and continue to drop it to here, not even find bottom there, continue to drop to here, right? So we don't buy on the way down. We follow trends. We want it. If we're long bias, we want it to show a bullish momentum. So if it drops to here, we wait for a bounce. If it does bounce, we grab it on the way up. That's a trade to VWAP. If it breaks up, and then we take partial profit. If it breaks above VWAP, we can worry about taking profit again on 7, and then even 7.2 if it keeps going up. If we take partial profit on VWAP and it rejects it, we just take the rest of the profit, lock our money in, and wait for the next break above, VWAP, or break above 7 for the next trade. This is also forming again another 5-minute flag. Okay, so that's that for ZIVO. The next one is VT. The lines here are from some, I was going to say from previous day, but no, I guess I've charted this earlier. It's below VWAP and EMA now, so everyone that's been watching the stream and everyone that's in the chat room knows I'm not really interested in trades like these. You have this EMA 20 line that's descending, you have descending resistance, just nothing there that interests me. I would be looking at the stock if it breaks above VWAP. So break above VWAP is a level I would watch. I can even set an alert. And then if it breaks above that level, I can worry about taking a trade. And even so, it has plenty of room to high of day, so that it has, even if we trade a break above VWAP, we don't worry about anything below. That's still a 9% trade, and it's fine. Important to note also in trading, the goal is not to buy at the lowest price possible. This is not long-term investing where you just want to, buy as low as possible and hold forever. You want to buy at a level that will allow you to quickly, very important, quickly, the amount of time that you spend in a trade is a big risk. So you want to buy at a level that will allow you to quickly get out of the trade with profit. And safely, it has to make sense. So if it's something is lower, you can say, oh, but if from here it goes to high of day, that's a 14% trade. I'd rather trade that than a 10% trade. Yeah, but that's not a real trade. You're making it up. what is telling you that this thing that's dying right now, a slow death, what is telling you that this thing will ever go back to high of day? Nothing. There's 7,000 stocks in the market. You can just go and buy everything that's failing and expect that it will go back up and say, I'm going to make a lot of money when it goes up. That's not how trading works. You want to see that it actually, you don't want to be the first buyer. You want to have a bunch of buyers coming in before you, showing you they're strong, and then you follow them. And that would be a break above VWAP. That would show that buyers are strong and you want to get in and follow them. Okay. So that's that. So we're not interested in that one. Actually, at this point, it dropped so low that the scanner even kicked it out. It's not even on scanner anymore. But anyway, we got a lesson out of it. CIPR, CAPR. We actually traded this morning also. It's failed below VWAP. It's trying to it tried to do an EMA bounce towards VWAP. Got rejected by this key level of resistance. Well, actually, I see that we missed it by like a cent, because look where this line is, and then where the rejection was. So I just want to make sure we're hitting it right there, because we have the rejection too. It's 6. It's a full dollar. It's a big psychological level too. And now the second test of EMA is failing as well. We were waiting here for a flag break. That's why we have this line. It obviously hasn't broken that flag yet. And now that it's below VWAP and even dropping below EMA, that flag is no longer relevant. So at this point, the only thing that we can wait in this is if it does manage to hold this EMA, but it's already dropping below it, so it's a little tricky. So maybe we would like to see is a flag break to just confirm, because even look on the 1 minute chart, you have these stairs stepping down. That's a common bearish setup. You have a ray of red candles, and you have a little bit of green. This is just shorts covering before they reopen positions or add, and then keeps going down. So there is nothing that shows us that the EMA is actually holding, and the new candle just opened. So the high of this candle is 592. If this, the high of this old candle is 592. If this new candle breaks above 593, that will show us that there's actually a little more buyers than sellers, because they were able to break above this natural resistance of the previous candle. So if they do that with volume, for example, see like this increase of volume, I normally like to see double the previous candle. So this is 200,000. If we have like a 400,000 candle that makes 593, that will be a good trigger for me to take a trade to 6 and VWAP, and then 6 and 605. So those are obviously smaller trades, but the risk in that is the low of the previous candle, which is 583, so right below at 582. So that's 10 cents risk. For if it goes to here, that's like 12 cents gain. If it goes to here, then you have a little more. You have 15 cents. It's not a great risk reward trade, and it's below VWAP and EMA. So even when you run all through all of that, then it probably doesn't even make sense to watch it. And this is why we do this analysis, right? Like, I don't need to waste time on this one and try and get this EMA bounce trade, because it's not good risk reward wise. So then I say, whatever it does there, I'm not interested. I'm either going to wait for a break above VWAP, for a squeeze towards high of day, or wait for a drop to this level. Because if it does drop to this level, then a trade towards EMA and VWAP has a little more risk reward potential. If it does a bounce, it's 3% to EMA, 7% to VWAP. So there is a little more range there. And what ends up happening is, again, we talk about this all the time, when you trade, you're not going to catch that whole move. So if the range is 7%, maybe you're going to safely trade a 3% trade. Between taking partial profit, waiting for confirmation to enter, and selling below resistance, you're going to lose something. So if you have a 1% range, it just there's not a lot of sense trading that. This one had a lot of volatility, but now it's below VWAP, hasn't quite touched the EMA yet, so we can just wait a break above VWAP, or maybe a bounce on EMA if it does touch it. And then ATER, still low volume for the day, but a stock that we've been trading for weeks now. If you guys have been watching the streams, it's pretty much on scanner every other day. So definitely something that we will be interested in today again. Okay, those are really the key two levels. So at this point, I'd either wait a break above this level or bounce on VWAP. There's no spread, um, even though the volume's a little light for today. But the reason probably there's no spread is because we just have this increased volume now. If it slows down again to this level, the spread is probably going to open up. It's already opening up, so we already have 2 cents, which is not a lot, but now we have 3. So it's showing you that, as the volume, now we have 5. So as the volume drops, the spread is opening up. So that's why volume is important. Because again, we talk about ranges, right? So if you have a range here of 4% on a trade, again, maybe you can safely trade 2.5% in that range. And then if you have a spread that eats up another 0.5%, then you are left with 2%, which could be fine, but you want to just make sure that you always account for the spread because it eats into your trade. And more importantly, if you don't properly set your order, the spread will prevent you from getting filled, and then you can really get messed up. And the last thing we're going to look for today is, again, the market. Futures are red. The market's gapping down again. So the VIXs are obviously going to be presenting trade opportunities. They're always great for, days when the market's red. You have UVIXY, which is more volatile than VXX because it's triple leveraged. Then you have SQQQ. So those are really the main ones that we trade in the shares room. They're ETNs, but they trade like, they trade like stocks. You buy them, sell them regularly like stocks. And then the options room is going to trade options. I am sure on SPY today. Okay, so that's it for this morning's stream. I will see you guys in the chat room. Be sure to ask any questions. If you're not part of the chat room, drop comments in the comment section. Ask questions, ask clarifications. At this point, you guys have been watching these streams for a couple weeks. So if there's anything different you want to see, if there is something that doesn't make sense, please drop it in the comment below. We want to produce content that you guys enjoy and find value in. Okay, have a great trading day and happy Friday. I'll see you guys on Monday.